MBI.com. This is Charles report is for the 29th, and we're about to end this month. Uh, Fairly ugly relative to where we started. I mean, up slightly, now down slightly. Not big change, but lots of intraday move. So from that standpoint, the story really isn't from the ES standpoint. We got what you need though from buy configurations here with orange dipping below green, improved extreme histogram, shakeout rising, magenta over yellows. These are all plus signs for a move here, resting at the 38 percentile. The biggest problem though here is the Nasdaq not doing anything close. Look at that extreme. Still don't have the dip of orange going below. Still have lower shakeout. Did have the dip of the extreme below the red line. Did fill though positive extreme going back from here. So that completes all of them from there. That was back in May. I did mark the one other one that you'd have right here, which would be back in April. That's quite a ways lower, another 1,000 plus points. But hey, the potential's there. It's just with the divergence between the two markets, it tends to modify the degree. Now, of course, the war. Well, yeah. So as we talked about, we expected that as price declined, they would reach a certain point that they would reactivate. Now the Iranians chose to try and do a preemptive thing and drive it back up, and they did. So that worked out well. Kind of thwarting the U.S. plan to let price dip back down and then start a whole new escalation. Um, yeah, they understand the playbook. I mean, this is not hard to figure out. Euro's super excited from that, and you can see it's really just like powerhouse because everyone says the dollar is so overvalued. Based on what, we have no idea because their measure of growth versus what actually is taking place in the EU, it's some kind of Ponzi scheme. Who knows? I don't know. It's crazy stuff, but really not practical to listen to some of these talking heads when it comes to some of these economic details because there's just no reality into what they're talking about. Now, gold at the upside of its range. Okay, fine. Same thing with Bitcoin. We flip over there. It's actually above the 23%, but still caught within the same range. And that's just because there's nothing clearly defining where we're headed at this particular stage. What's going to happen with oil? How close are we to exhausting all the reserves? You know, will there be continuation of this blockade setup? Nobody knows these answers, and so you're trading fear. And this is what we talked about for months ago, and it's been the whole case since this war started. And that's typically to the upside down. Throw in the whole AI trade, and yeah, you get complications. So from a 50K standpoint, almost impossible to really read anything from there. That's why I've been mostly focused with the 5K chart because a lot easier from the reading standpoint. You know, we had the post market pump to the dump, and now European session rise back up. And this is all going to be relative to how excited people are about the prospects of peace versus not. But you can see these ranges are beautiful in the mornings, both up and down. Nice little drawdown going in through there. They attempted that one didn't work, and then the secondary rise, we started to get much stronger turnaround points. And so when you look at it from a broad standpoint, you had the higher MBI red, and then boom, you redo it again. But this secondary red MBI pivot is higher than this previous one. Shakeout also was improving at that point, and we had the rising gold. And so at that point, once you move to a positive shakeout, yeah, the buy setup goes. And then it's just a question of where your stops are and whether you re-enter the little dips. I tend to do those simply because it just creates more executable trades going in and out throughout. But well, actually, that one should be red because that was classic. What I'm looking for, and we're programming it now here, is this. You get the range where you have the green DOC rising to cyan, and the inverse is true. And then as it narrows, right when you get to your 0 point, that's usually your equivalent spread. And then obviously when the DOC spread actually takes place, where cyan is moved above red and above green, and you get that major transition. and that's that big break, and that's what leads to the decay. And then, of course, you're looking at that point for magenta under yellow, under the 33, blah, 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 the whole series of things. And then MBI white leads, and that gets you to your zero, which is exactly what it did. Then you rinse and repeat. Same situation. Rising positive shakeout from there. That was mostly a short cover rally up to the 50%, turns around, does the exact same thing. And you can see this when you get to the extremes, and this is where they become really interesting, because you start off with a narrowing of the range between cyan and green, and then it breaks. And then it starts to grow. And as that grows, you reach a peak spread distance. In this particular case, I can get that to show up there. Your red at -10 to a +5. So, it's a 15-point swing. And then, boom, as soon as it narrows, you've got a little bit of a bounce. And then you're waiting for, boom, this crossover. And when that crossover takes place, you're doing that under MBI white lead. That's not going anywhere. So you basically are seeing right in front of your eyes a failed long attempt. Well, you know that as soon as that narrows, boom, you're going to get the reverse. And in fact, pretty quick, short range in this particular case, the distance between the 23 to the zero, not a whole lot of points in that particular case, but it went and carried through a bit further than that. Was pretty decent gain from that standpoint. And then another failed execution rally, same situation. And then you're just watching the red. So it just repeats over and over again. And that spread ratio really tells everything that you need to know. And then particularly whether or not bulls or bears are going to survive with any one of those runs. And you get the exact opposite situation here where you have the magenta rising with the MBI white, and that's a short cover rally. Talked about it a billion times. Clean and simple. So all in all, can't complain. There's plenty of points to be had, and I think that volatility is going to remain. You're not going to be able to shut it down because there's enough insecurity that if any one side gets an improved balance, they're able to drive price until there's some kind of clarity. And the reality is everyone's going to now be looking at the economic numbers in the U.S., whether or not you have economic growth or you're moving towards a recession. And that's the real question mark going into this. So that's what we'll be focused on as well. Anyway, have a good one. Trade well. Hump day. So see how things are going to end towards the end of the week and the end of the month. Have a good one.